Hi, I'm Simon Malster. I'm the MD of Investors in Property. We are ski property specialists and we are selling ski property in over 60 resorts throughout the Alps in Austria, France and Switzerland. I'm often asked by clients to give an overview of the differences between the three countries so they can form a view as to which perhaps will be the most appropriate for them. Usually they start with the fiscal questions, which are how much they can borrow, what it will cost them, and the taxes that they are likely to pay on any rental income. So let's start with, first of all, banking. How much can I borrow? In Austria you can borrow up to 60% of the purchase price. In Switzerland it's 70%, and in France it's 80%. You can borrow the most in France, but the French banks tend to ask the most questions. Switzerland has a little bit more of an old-fashioned attitude to banking, and they look more at the client as a whole, and particularly the local cantonal banks, which we find to be a little bit more flexible. The main difference, though, is what you will pay in terms of interest rates. Both France and Austria, of course, are euro-based. Switzerland retained the Swiss franc, and Swiss franc interest rates have always been extremely low. Currently they're around 1%, and in France and Austria you will pay over double that. Well, why have they been low? They've been low because the Swiss franc is a very strong currency. They need to keep their rates low to keep the Swiss franc low. That's basically the way it works. And today we have an exchange rate pound-Swiss francs, 1.2 Swiss francs, £1. I started this in 1986. So in 1986, there were 3 Swiss francs to the pound. So the Swiss franc has appreciated by over 250% against the pound in that period. That means that if you bought a property back then for £1 million, it would in sterling terms be worth £2.5 million today, and that's without taking into account any capital appreciation of the property, purely on the appreciation of the Swiss franc against the pound. And if I take any slice in the last 30 years, since I've been selling in Switzerland, of 5 years, I will bet you that at the end of that 5 years the Swiss franc will be higher in value than the pound. It's been a very long progression. The Swiss franc has always been regarded as a safe haven, and nothing has highlighted that more, unfortunately, than the recent events of the coronavirus pandemic. We saw when the countries realized and investors realized the extent of the pandemic in mid-March, the Swiss franc broke all records against virtually every single currency. It went through the roof. It's settled down a bit now, and currencies generally have stabilized, but the Swiss franc has always been a powerhouse for investors. There is no ideal time to buy. Clients say, well, I may have missed the boat. I should have bought a year ago or 2 years ago or 5 years ago. Well, it's like fixing your interest rate. There's no right time to buy, but long term the Swiss franc has always been a good bet. And that's one of the many reasons why we're finding that when I go to client meetings in, say, Amsterdam or Brussels or countries which are euro denominated, one of the major driving factors for clients in those countries, as well as elsewhere in the world, is I want to diversify and I want to buy a property asset in Swiss francs. We'll move on to some of the other topics in the next video, the next instalment. Meanwhile, if you have any questions, then feel free to contact us through our website or email me, simon@investorsinproperty. Look forward to hearing from you and to seeing you next time. Thank you.